Good day, fellow traders. Welcome back to another day trading recap. Today, I'm going to go over a few of my trades today, and I want to talk about the king of all levels. The king of all levels is the previous day close level. So I'm going to repeat once again. The previous day close level is very, very important because if you think about it, you have all the buyers and all the sellers, right? They're all transacting throughout the day, and at the end of that day, the previous day close is what they have decided that that asset is worth. This Just take a moment and think about that. All the transactions, the millions of shares that are being transacted throughout the day, and that price, the final price, the previous day close price, is what all participant has decided what that price is worth that day. So that's not to say that the pre-market and the post-market there won't be any movement, right? Because news is constantly changing. But by and large, that is always a key level. So as you can see on my screen, I shorted ticker symbol 4 today. You can see right over here, this was previous day close level. So I had my eyes set on this level to short off of. And the reason I was short biased on the stock is because if you look at the daily chart, right, the daily chart, so Ford has been kind of in a range, over here. It broke below it on the 24th, February 24th, but it quickly squeezed back up, got stuck in this range again, and 3 days ago it broke below this range, right? So what happened is that the price tried to come back up, right? It had this nice shooting star candle which indicates selling pressure around this area. It did try to come back up yesterday, but it got slammed back down again. So this is why I was very, very short bias in this stock. And once you identify your bias direction, all you gotta do is find a level, right? So for Ford, it was pretty straightforward. I mean, you can see right here the previous day close, right over here, many touches. So there's even a little micro range over here. So this is obviously a key level, right? There's no doubt about it. So in the pre-market, the price went down below this level, but there's no need to chase it. If the price doesn't come back to this pre-market previous day close level, you just don't trade it. No need to rush. So what I did is I set an alert, and I waited for the price to come up. As soon as it came up, I gave it one try over here because I saw a shooting star candle over here. So after that shooting star, I gave it a try. I gave it a very tight stop. That was kind of my mistake because my initial plan was to have a stop over here, but I decided to be more aggressive and put a stop over here, and I got stopped out for a full 1 hour loss over there. But that's not a problem because right after that, it squeezed up above the previous day close and as quickly slammed back down. I went short again, and the rest was history. And I shorted the living hell out of it after that, right? But I over partialed over here, but overall it was a great short. I was able to hold it for I think 2 hour win. So that's trade number one, and I did exactly the same on UPST. So UPST, if I go into detail on the daily chart, same deal, right? Had a right over here, shooting star 2 days ago, red candle the previous day, not too far from the moving averages, rejecting them, and should have a move. High probability that there will be a move downward today. And we got exactly that. Once again, I had my eyes on the previous day close. This was the level that I wanted to short off of. Unfortunately, it squeezed well past that in the once the market opened. But there was this other level that I had marked off over here, which is close to the R3, and there were some nice wicks to the downside on this the previous day. But I didn't get in over there. I waited for the price to come back below the previous day close, and then it formed this kind of double top. All right, one top over here, one top over there. I went short with a stop over here, I have no idea why I got out of this trade. I think it's because I had a bad trade on ticker symbol PFE. I was just maybe lack of confidence to hold the trade, but once it touched this level, it rejected it, started squeezing back down to the previous day close. I went short again, and I was able to ride it down. So all this is to say that the previous day close, if you guys are day trading, make sure you have that level marked off, and just if you're just starting off, maybe just see how the price action react at those levels, right? Just to get a feel of it. And I think over time you'll realize the previous day close is almost always a critical level, right? So hope you guys liked the video, and I'll see you guys next time.